So I think creating this benchmark, first and foremost, will demonstrate the historical performance of private markets and will create something against which investors can really, in real time, measure the performance of their investments.
Welcome to FTSE Russell Convenes. I'm Gerald Toledano, and this session we'll be talking about benchmarking private markets. I'm joined by Tom Keck. Thank you, Tom, for joining today. Tom, you are a co-founder and partner at StepStone Group, and you're also the head of research and portfolio management. Do you want to take a moment to introduce us to StepStone Group?
Thanks, Gerald, for having me. It's a pleasure to be here. When I tell people about StepStone, they often comment that they're surprised that they've never heard of us. We manage over $700 billion of private markets allocations to private equity, private real estate, private infrastructure, and private debt. Over $180 billion of assets under management. We deploy over $75 billion per year into the private markets. We have over 1,100 employees and about 30 offices worldwide.
Okay, that's very impressive. I know also that you're particularly famous for your very rich insight, your ownership of some very unique data, the development, of a system that is called SPI. Do you want to give a little bit more background on that side?
Sure. When we started the firm, we saw data and technology as a weak spot for private markets. There wasn't a lot of data and information available about how the different strategies performed relative to each other and also relative to traditional public markets. So we built a data and technology platform to collect information about the market from the ground up at StepStone. Initially, we built it for our internal use in doing the investments that we do. And about 10 years ago, we started to make it available to our clients, also to sell subscriptions to institutional investors who wanted to benefit from the information and insights that are available on the system.
So FTSE Russell, we've been for the last 40 years at the forefront of providing insight and representativity of investment through benchmarking, indexing that are representative. This week, we're very excited to be announcing a partnership with StepStone Group, where we're going to use your insight, your methodology, your models, and our relationship to develop some benchmarks that are going to be particularly relevant for the asset owners that are starting to take more and more total portfolio approach, for investment funds that are in need for a more frequently observed, evaluated portfolio. Can you give also a little bit more insight how you see this partnership integrated into what you are seeing as the new way of allocating and investing in private markets?
Yeah, so I think as private markets have matured, the breadth of investor base has widened substantially. And we see a convergence between the private markets and the public markets. We're using our data and information to try to create products that allow investment by investors who traditionally have underinvested in private markets. Individual investors would be a good example. And we have noticed this trend towards public-private convergence. We know a lot about private markets. We don't know so much about public markets and construction of indices in particular. We really searched for a partner who could sort of navigate our blind spots around how to create these indices and ensure that they were calculated properly and in a sustainable way. So we really were excited to join forces with LSEG and FTSE Russell to create this new set of benchmarks that I think will really be differentiated, and the ability to create products that will address these new consumers.
Very interesting what you are saying, and we are joining forces with both regulated firms that are coming from a different angle, from the asset management and fiduciary side, from the benchmark administration side. Our raison d'être, or a path to market, is to achieve adoption and move into a broader investability of market. How do you see that developing potentially? Because we're coming from pretty far out in the private markets. How do you see the roadmap or participation or cooperation coming?
I think the cooperation is incredibly important. We have data and information to create an index, and I think that's incredibly important. Historically, indexes in the private markets have lagged 90 days and have really only been available on a quarterly basis. With our data and technology, we're able to overcome some of those limitations and create a daily priced index, so you'll have real-time availability of the index value. But as I mentioned before, a lot of people have never heard of StepStone. It's important for us to have a partner like FTSE Russell who has the credibility in the market to gain adoption, as you say, to essentially provide the expertise in calculating these indices and distributing these indices, but also to provide some credibility with a broad range of investors that the data that we have are the best available in the market.
You mentioned, earlier, individual investors. We're seeing that, as a definite big trend. A lot of the GPs are talking that it's an untapped, enormous potential for investment, for fundraising, and it's also an opportunity for retail and wealth to create their participation, into the asset class. That it should form part of the asset allocation. We've seen the rise of the semi-liquid evergreen fund. Maybe if you take all the intersection of benchmarking, retail, evergreen, semi-liquid funds, can you give a little bit of insight and your perspective on how this all comes and form together?
So I think making private markets accessible to individual investors has been a hue and cry over the last 5 to 10 years. If you look at performance of private markets relative to public markets, real value added by general partners who are taking active ownership in these assets. Because of regulatory limitations, because of liquidity limitations, because of data and information limitations, individual investors have largely been unable to access those opportunities. And so they've been missing out on this type of excess performance that has been increasingly available to institutional investors. So I think creating these indices will enhance the understanding of private markets generally. So the first barrier is just education, getting people to understand what is the value proposition of private markets, what's the role they should play in an investment portfolio, why do I need to have this access? So I think creating this benchmark, first and foremost, will demonstrate the historical performance of private markets and will create, going forward, something against which investors can really, in real time, measure the performance of their investments. Once you get beyond the education, there are additional technologies required, interval funds, intermediating liquidity for individual investors. That technology has been advancing, but I think really this education component in providing visibility into how the overall market is performing is important. I think the second piece, once you have the adoption of those indices, is then you can start to create tracking portfolios that both institutions and individual investors will be able to invest in. Just as we've seen index investing in public markets gain a lot of traction, I think the historical performance of private markets would lead to an interest in having index tracking portfolios for a variety of different strategies.
On that point, and to complement on that point, you have the particularity to be both on the advisory side. You're also managing some separate managed account, some investment fund. You are a player also in the secondary space. Taking a little bit that hat and thinking about the benchmark and the tools we are going to build, how do you think they help potentially developing a more accurate, a more fine liquidity, both comfort and mark for the players and the provider of the liquidity, and maybe expanding the number of participants to this business?
I think historically there's been a lot of discussion about the opacity of private markets. There are thousands of funds that are available. The funds are marketed, every 3 or 4 years, and the information about the performance of those funds is presented in different ways and can be very difficult to consume. It's job security for StepStone Group because we essentially provide the service of understanding all of that and making those investment decisions. But if there were a reference portfolio of assets where the contents of those portfolios was better understood and you could explain how those portfolios contributed to this tracking portfolio, then I think there would be greater liquidity available in those particular funds. And I think providing additional liquidity has attraction both for individual investors, but also for institutions, particularly as institutions have become more adept at rebalancing their portfolios. They'll have a greater desire to be able to find liquidity for some of these private assets.
Well, thank you very much, Tom, for joining us during this Convene session. I also want to extend a warm thank you and welcome somewhere to the FTSE family with this partnership. And we're very much looking forward to the cooperation and the long-standing partnership that we're building together.
Thank you very much for having me. It's been a pleasure.
Pleasure. Thank you very much.